What's going on, everyone? Happy Money Monday. Both of us are alive today. What a good day to be alive. With all the constant change, guys, going on in the world, we thought it'd be a good idea to just talk a little bit about what's going on and to allow investors to reposition themselves to best fit their needs.
Yep. So the recent events of the past couple of years have truthfully pushed countries towards nationalism and away from globalization. They don't want to rely on other countries' either supply chains, or they want to definitely be knowing who they're doing business with and the fact that they're doing business with good people. So there's been a shift of countries to move towards nationalism. Larry Fink, who's the CEO of BlackRock, he just was quoted saying that he thinks we've seen an end to the globalization that we've seen for the past 30 years. And globalization is good for the economy. There's constant trade flows, there's more capital flowing, it's just more efficient. When you end globalization, you have a setback of trades, you have oftentimes higher prices because you're producing more of goods yourselves rather than outsourcing them to other countries. And at the end of the day, it's just not as good for the world economy. The World Bank actually predicts that the growth rate of the world's economy will shrink because of the decrease in globalization that we've seen recently. So essentially, we've seen countries reevaluate who they want to be in business with and whether they want to depend on other countries to do business with.
With that happening, the Chinese government has reached out to Saudi Arabia and asked if they could price their oil contracts in Chinese yuan. That's the first time that has happened since 1975. All Saudi Arabian contracts have been priced in US dollar.
That's almost 50 years that Saudi Arabia is doing all their business in United States dollars.
And to give you a bigger sense of the dominance of the US dollar in the world, 80% of all oil contracts are priced in US dollar. So the US is a big dominant player. It's going to be a change in just the global way that oil trades right now. With these constant changes, guys, the old way that the world used to operate, a lot of those policies and procedures are getting thrown right out the window.
Yeah, and pretty much to wrap up kind of what we think investors should do, you should be weary of these changes if the United States has less dependence on it from other countries because, countries are doing the business on their own more, or they're maybe working with, say, China to do business. There might be a weakening of the United States dollar. If people are buying less dollars because that's what they're transacting in, if people are buying less dollars, that might lead to the dollar devaluing. And so in order to think about hedging that as an investor, you want to be investing in income producing assets. That could be real estate, that could be dividend paying stocks, that could be any sort of business that pays you in dividend, or you have equity in something. You also could look towards crypto or gold to hedge against the United States dollar devaluing. Look at cryptocurrencies over the past week. Bitcoin's almost to 50,000 and Ethereum's almost to 3,500. So they're approaching back to highs as kind of the world's shaking up. People are just reevaluating who they're doing business with, what they think value will come from, and at the end of the day, I think it's important to really keep the macro in your mind and just keep conversing about the ever-changing landscape of business. It affects the economy, it'll affect our lives, and it's important to be aware.
It's affecting our lives every day.
Yeah. Cheers, guys. Happy Money Monday. We hope you crush the week.
Stay healthy.
Your boy, Mr. ROI, and Coach Finance are out, so we'll talk to you guys later. Woo!